What's up, guys? Today we're going to talk about the difference between trading options and trading futures. I've been trading options personally for a little bit over 7 years now, and I've been doing it successfully as well. I've had plenty of 100%er, 200, 300%er plus trades, and I recently switched over to futures just because I think it's a little bit better for me. But in this video, we're going to be talking about the major differences between the two, pros and cons, and which ones you should trade. So I'm not going to waste too much of y'all time. Let's just jump right into it, okay? Cool. So differences between the two. So with options are very complex derivatives. Now, when I say derivative, it's a derivative because the option that you're going to be trading is going to be derived from whatever the underlying is. So if you're trading an Apple call or a put, then the call or put contract will be derived from the Apple stock price, right? It's a derivative. So there's a lot of factors to consider when trading options because they are complex derivatives. You have to think about strike price. So strike price is basically like your target price. Where do you think that the option will be, right? Direction. Do you think it's going to go up or do you think it's going to go down, right? Are you buying a call or are you going to buy a put? You have to think about strategy. Are you just going to buy a call or a put? Are you going to sell a call or a put? Because you can buy to open in options and you can sell to open as well. Are you going to do a spread? Are you going to do a covered call? There's so many different strategies to choose from. Time and expiration is huge. Some strategies do better with less time to expiration. Some strategies do better with more time to expiration. And one thing about options with expiration, if you buy an option and it's not in the money by the time it gets to your expiration, then guess what? Your option is going to expire worthless. That brings us to the Greeks. Theta. Theta is going to be the rate of decay of your option. So every day, your option will lose money due to theta. Delta is just the rate of change in your option on a $1 move up or down in the underlying, aka the stock that you're trading. So the underlying itself, right? So you can trade options on underlyings that follow the market indices, and I have done this successfully, mind you, such as SPY or QQQ, or individual stocks themselves, Tesla, Apple, JP Morgan, whatever. Okay, now let's get into futures. So when trading futures, you're only focused on direction. All right, price either moves in your favor or it doesn't. There's no strike price that you have to choose. You don't have to worry about the expiration of the future contract because future contracts do have expirations, but not in the same way that an option contract has. There's no Greeks, there's no theta, there's no delta, so you don't have to worry about that, right? So you can't trade futures on a particular stock, right? There's no Apple futures, there's no Tesla futures. Maybe one day there might be, but as of right now, 2026, January 5th, there's not. All right, you have to trade futures on a market index, which is going to be Nasdaq or NQ, S&P 500 or ES, or like a commodity, could be oil, could be a metal like gold or silver, etc. So now let's get into pros and cons between the two, okay? So let's just start off with options. So pros, you can capitalize off of specific news events. What do I mean by that? For example, let's just say Nvidia comes out with a new chip tomorrow that's supposed to power all the AI in the world for the next 5 to 10 years, right? Their stock will probably move off that. That is a news event that you can capitalize off of. Another example, let's say a plane from Boeing Airlines crashes, right? God forbid, we don't want that to happen. But if it does happen, you could probably expect Boeing Airlines stock to go down, right? And you could probably get put options that will appreciate in value. So that's one pro of options. Another pro, you can actually use them as a tool to make an investment. So rather than just buying shares of a stock at whatever the current price is, you can sell to open put options on that stock. And what that will do is if you sell to open a put and your put expires worthless, you just keep all the money that you sold it for, right? If you sell to open a put and it actually expires in the money, then that means that you're going to get that stock at a lower cost basis, right? If you sold a $15 strike put and the stock goes to 14.50 at expiration, then you're going to have to buy those shares, but whatever premium you received on that $15 strike put sell, that's going to lower your cost basis. So you can actually use options as a tool to make an investment. You can, number three, another pro, you can generate high probability consistent income through selling option premium. So let's just say you have at least 100 shares of a stock. You could run a strategy, literally a can't lose strategy. Search it up yourself. I'm not making this up. You can run a strategy on your options or on your stocks rather called a covered call. A covered call is just when you sell an out of the money call option, hope that it expires worthless. Again, you'll be able to keep that premium. Or If it expires in the money, then you can run the wheel strategy, right? Your shares will get called away, but you still got to keep a premium. And now you have money to sell puts again and just keep on making a wheel out of it, right? That's another option strategy that you can do. Another pro, you can use options to capitalize off stocks you already own. So, like I said, just cover calls. Another pro, you can trade options non directionally. So, there are strategies in which you can actually profit if the market doesn't move. There's strategies called an iron condor, which is essentially just two credit spreads, right? One on the top, one on the bottom. But essentially, if the market stays within your predefined range, you'll be making money. So you can run non-directional strategies on options as well. Now let's talk about some option cons. So one con that you have is time decay, which is theta. So like we talked about in the previous section, theta is one of the Greeks. So what theta is basically the rate of decay for your option. So each option has a value called theta. And whatever that value is, it'll tell you how much money you're going to lose per day just by holding your option. So theta is actually bad for option buyers, but it could be good for option sellers. But that's one con of being an option buyer. Another con of trading options is poor liquidity on some underlyings, right? So on certain stocks, they might not have a lot of volume in the option chain, right? The bid and ask might be super wide on an option chain for some stocks, and you might not be able to get a good fill, right? Another con, there's expiration pressure. If your contract isn't going in the money by expiration, you're feeling pressure, right? Your position is taking heat, right? You have to worry about the expiration date. Another con, and this was pretty much the main reason and why I switched over from options to futures. You can still lose money even if you get the direction right. So I'm a day trader, right? I use the lower time frames to execute my trades. So I'm executing my trades off of like the 10-minute time frame, 5-minute, even the 1 minute sometimes. And because I use those time frames, when you're trading options and you're trading a 0 day to expiration, even if the stock is moving in the direction that you wanted it to go in, if it doesn't do it quick enough, then you're still going to lose money due to theta. And that's not only for 0 day to expirations, that could be for weekly options or swing options as well. So you can still lose money even if you get the direction right. And that was really the number one reason for me to switch over from options to futures. Okay, another con, it can be expensive to trade certain stocks, right? Certain stocks are higher in price, and when they're higher in price, the options will be more expensive. That's kind of just how it goes, right? And the last con is just the overall complexity of the product. Options are very complex financial instruments, and there's a lot of different factors and variants that go into them. So it's important to fully understand what options are before you start trading them. Now let's talk about the pros and cons of futures. So number one pro, no time decay. So all you have to do is get your direction right. As long as the futures market goes in your direction, you're going to be making money, right? You don't have to worry about expiration. You don't have to worry about Friday at 4 p.m. There's no time decay, which is great for day traders, right? Number two, futures are very liquid, right? You don't have to worry about an illiquid option chain or a wide bid-ask spread because the futures market is extremely liquid. You're going to get filled with barely any slippage, all right? So only needs to worry about direction. I said that already. In my opinion, futures are more beginner friendly than options. Options are very complex and they really take a lot to learn and understand. Futures are complex as well. I'm not going to say that they're easy, but I just believe that they're easier to understand, right? You enter here, it's either going to go up or it's going to go down. Here's your target, here's your stop loss, right? Okay, cool. Another pro, there's more reputable prop firms to take advantage of. So I see some option prop firms popping up here and there, but they're kind of new and I don't really see many people talking about them online. But if you search them up, you will see people talking about these futures prop firms. Tradeify, Lucid Trading, Take Profit Trader. I use a couple of those, and they pay out, and they are reputable. And the biggest pro that I like off futures is that you can trade directly off of TradingView. So when I was trading options, I used to have to do my analysis on TradingView and then switch over to my brokerage app like Robinhood or E-Trade to actually execute the trade. But on futures, you can do your analysis and you can execute right on the same chart that you did your analysis on. So that's a huge pro in my book. All right, now let's get into some cons of trading futures. So there's less strategy variety. So in futures, you're either buying or selling. There's no credit spreads, there's no covered calls, there's no iron condors. It's either up or down. So there's less strategy variety there. Another con, you can't trade nude catalysts on specific stocks. So like we talked about on the option pros, right? Like if there was a really good event for a company, right? You're not going to really be able to trade that on the futures market because you're trading the market index as a whole, right? You're not really trading one stock. Yeah, that one stock might, contribute to some movement in the market as a whole, but it's way different when you're trading futures, right? And the last con is there's a higher capital requirement for personal accounts. I think on a lot of brokers, I think they have minimum like $1,000 or $2,000 to be able to trade micros. Um, when options, you can jump into options with $50. My first option trade was literally $60 to like $700 plus overnight. So there is higher capital requirements for personal accounts, and that is a con for futures trading. All right, now we're going to go over which is best for you. So let's just start with options. So I'm going to say you're going to want to go with options if you'd rather trade specific stocks rather than trading the market as a whole. And this is good, like I said earlier, because there could be certain catalysts that could drive a certain stock up 10, 20, 50% plus, while the market as a whole maybe went up 0.5% that day. All right. Go with options if you're okay with waiting for your position to play out. So understand there is expiration risk and pressure, and you do have to navigate this in a savvy manner. If you're okay with doing that, then I'd say go with options. Another one, go with options if you're able to understand the complex math that goes into options trading. If you can understand calculus, the Black-Scholes model, calculating the Greeks, theta, delta. If you're cool with all these things, I'd say go with options trading. Another one, go with options if you're looking to be more savvy with your investments. Like I said earlier, you can use options as a tool to get a better entry price to buy shares of a company, right? You can use the shares that you already own of companies to make money, right? You can kind of use them as like a rental property, right? They can bring you passive income. So go with options if you want to be more savvy for your investments. And the last one, if technical analysis doesn't mean as much as fundamental analysis to you, then go with options. Technical analysis is going to be looking at the chart patterns, looking at liquidity levels, looking at fair value gaps, looking at support resistance, whatever you want to call it. If all that is kind of mumbo jumbo to you and you are really worried about, okay, how much money did the company make last quarter? What was the revenue? What was the profit? Last year, how many users did they have? How many users are they projected to have? If you're worried about fundamental analysis, then options might be better for you. Okay? Now, I'd say go with futures if you don't want to worry about that complex math. You don't want to worry about the delta and the theta. All right? Go with futures if you're more comfortable with just choosing a direction rather than a complex strategy. Right? When you're trading futures, like I said, it's either up or down. There's no calendar spread, there's no expiration, there's no strike prices, right? It's just up or down. Go with futures if you want to trade at times outside of the New York session. So I didn't mention this earlier, but options are only open from 9:30 a.m. in the morning to 4 p.m. Eastern Standard Time. So that's as of January 5th, 2026. That could change in the future. I don't know when you're watching this video. But as of right now, that's the only time you can trade options. The future market is open 23 hours a day, right? It's open all day. The only time it's closed is between 5 to 6 p.m. Eastern for maintenance. But the futures markets are open, right? Go with futures if you're more focused on trading than investing. Two very different things that I'll make another video on, but futures are more suited for trading, I'd say, and options are more suited for investing, I'd say. And also, last one, go with futures if fundamental analysis doesn't mean as much as technical analysis to you. If you enjoy going on the chart and looking for key levels and trying to snipe trades, then definitely go with futures because even on an option, you can snipe a trade, you can get a perfect entry, right? The stock could never go down from your entry, but if it doesn't get to your target fast enough, then you can still lose money, all right? Now, I'd say go with futures if you don't want to worry about that complex math. You don't want to worry about the delta and the theta, all right? Go with futures if you're more comfortable with just choosing a direction rather than a complex strategy, right? When you're trading futures, like I said, it's either up or down. There's no calendar spread, there's no expiration, there's no strike prices, right? It's just up or down. Go with futures if you want to trade at times outside of the New York session. So I didn't mention this earlier, but options are only open from 9:30 a.m. in the morning to 4 p.m. Eastern Standard Time. So that's as of January 5th, 2026. That could change in the future. I don't know when you're watching this video. But as of right now, that's the only time you can trade options. The future market is open 23 hours a day, right? It's open all day. The only time it's closed is between 5 to 6 p.m. Eastern for maintenance. But the futures markets are open, right? Go with futures if you're more focused on trading than investing. Two very different things that I'll make another video on, but futures are more suited for trading, I'd say, and options are more suited for investing, I'd say. And also, last one, go with futures if fundamental analysis doesn't mean as much as technical analysis to you. If you enjoy going on the chart and looking for key levels and trying to snipe trades, then definitely go with futures, because even on an option, you can snipe a trade, you can get a perfect entry, right? The stock could never go down from your entry, but if it doesn't get to your target fast enough, then you can still lose money, all right? So that was the video, guys. Hope I cleared it up for you guys. Let me know what you're trading down in the comments below, and just let me know if you have any questions, all right? Thanks for tuning in. I'll catch you guys on the next one.